All right. Good evening, traders. How's everybody doing? Let's do a brief audio and visual check while I get a few things set up on my end. Let's see here. Looks good. Sounds good. Great. All right. Well, let's just get started. Welcome, everybody. Welcome to Slow Markets. As always, I'm Coach Dakota, Coach DBA. And there's our Top Step risk disclosure in the YouTube chat. Everything that we say and go over is for educational purposes only. Now, how was everybody's weekend? Back at it. Sunday night, markets are open, markets are moving, and it is a brand new, fresh week, fresh month. Good evening. Yes. How's everybody doing? Have you traded? Are you up? Are you down? If mobile, just going through some of these. You guys could hear me, right? Or am I just... Oh, I know what it is. I'm on delayed. Excellent weekend. Traded it up. Let's see, all-time high soon. Made my PDPD money already and locked out. Wow, you've already made it up and locked out. Blew your combines. I'm down today. I was trading tonight, and I already took my loss. And I mean, for one trade, one loser. I'll go over it. I was long the Nikkei, and I took a loss. Already shorted gold. Man, lots of activity already started. So let's get to it. We'll go through our regular rapid fire, and it's a shortened class. It's Sunday night. It's an hour-long class. So we'll go through the Nasdaq, crude oil, the Nikkei, gold. Maybe we'll talk about Bitcoin a little bit. I'm starting to continue to watch and play around in Bitcoin. I've started to build a little bit of a portfolio in my personal account, finally, for the first time. Not just Bitcoin, but others, and it's been something else trying to learn about it. Up 457 on a combine, great. So let's go through this. Yeah, we'll talk about it. NABIK. Not any meme coins. I haven't done any meme coins. I'm getting distracted. Here. Let's take a look at, this is the Nasdaq. I usually start on the daily. Let's take a look at the daily. Still, nothing has changed. Nothing has changed in the Nasdaq for over, almost 2 weeks now. We've had that big sell-off on the, November 14th, November 15th. And let's take a look at this. Look, nothing's changed. Nothing has changed. We've been in this channel for 2 weeks. It's been by the dips, looking for this market to continue up. Tonight, we've had a little bit of a sell-off, but there's an area, this zone right here around 21,200, like 21,020s, these lower like 21,000 zone. I want to see, the market has now created a bit of a resistance. We created a bit of resistance last week, not once, twice, 3 times on Friday for the 3rd. And so if we do gain enough momentum to break out, very realistically, we could see this market return back up to this 21,200s, maybe 21,300s. Come and see if we could test some all-time highs. I like it. It looks good. Let's zoom in. We could take a look at the hourly chart. Let's go through here. Let's see. I mean, yeah, look how bullish this looks. You can see there was the big sell-off. When was this? This was on the 27th. And then ever since then, it's been kind of just going up and to the right. And yeah, kind of just straightforward, right? Buy the dip. It's never a perfect line. It's never a perfect. There's nothing perfect in the market. It's always zones. And sure enough, I think it's more of the same. Looking for Nasdaq to break through. You can see this has been a nice area of resistance. And if we can break through this area of resistance, I think we can have that continuation back up to these, you can look over here on the left-hand side and see, there's a nice zone that we could be targeting up here in the 21,260s, somewhere up in that area. And yeah, simple, straightforward. I like it. I like longs going into tomorrow. I'm going to be on fast markets. Fast markets during TopstepTV, start of the new week. It's going to be fun. Tomorrow I'm going to be showing, and tonight I might talk about it a little bit, of what I'm going to be starting to show when I'm on TopstepTV, because I talk about process over profits all the time, right? I've been trying to make it a point in my class and when I'm on Topstep TV to stress process over profits, process over profits. And I've been talking about it a lot. And so I want to kind of start showing that a little bit more. Now, I know it's easier said than done. Everybody here, if it was as easily done than said, then everyone would be a lot more profitable. But I think what I'm going to do, and since Topstep X has those capabilities, I'm going to do just that. So one thing that traders struggle with is seeing the dollar amounts. And I think going forward, I'm going to go ahead and set, instead of dollar amounts, I'm going to do points. So going forward, whenever I'm in class and whenever I am trading and on Topstep TV, I'm going to keep my chart value displayed in points. And so what that means is whenever I place a trade, let's just say I'm going to buy the Nasdaq, I am being displayed in points. So now when we're watching the P&L, we're watching the market and we're managing our trade, we're looking and we're thinking in terms of points. And it doesn't matter whether it's one contract, 2 contracts, 3 contracts, it's still the same. We're thinking in terms of points. We're focusing on process. We're focusing on, managing the trade and following our rules and following the process that we set. And no longer looking at the dollar amounts. Yes, you could still see the dollar amounts up here and to the left. And so I've been considering not showing this. I don't know. What's the chat where if I'm just hide everything. So if I just hide everything and I only show this, and whenever I'm Topstep TV, I only show that. What's everybody's thoughts? Because I want to show the process over the profits. And if we're thinking about the dollar amounts and it affects us, how come points over ticks? I like points. I say keep it, hide. I like the points idea. So that was option number 1. Option number 2 was just to show say this, just show my P&L and then this. Because what a lot of traders struggle with is the dollar amounts. When they're in a trade and when they're starting to size up, or they're wanting to increase their size, or they're wanting to get a consistent level of process and they want to follow their process, then this is hard. It really is, if that makes sense. But Dakota, if you show points, you won't know how much you're up or down. I don't care. To me, it doesn't matter how much I'm up or down in the dollar amounts, because every single one of my trades in the process is the same. It will be the same. So maybe keeping this for everyone to reference it, because I know a lot of traders, they really enjoy seeing this and how much did you make or lose in a single dollar amount? But for me, and what I always try and teach, is process over profits, process over profits. It doesn't matter how big of a contract size you are in, you want to make sure you're following that process. So for example, if I want to risk, say, 10 points, and my profit is going to be right here, so I'm going to be making 8.5 points, and let's just say I'm risking, let's just say there. This is just purely an example. Maybe we're looking to make 29 points. So something like this, and say this is going to be my process. That should not affect you. The way that the P&L and the market moves, like whether I'm down 2.5 points or I'm up 2.5 points, that should have no emotional effect. We just simply trade what the market's doing. We follow a process. Now, this is 3 contracts. It doesn't matter whether it's the Nasdaq Mini. It doesn't matter whether it's the Nasdaq Micro. It doesn't matter whether it's 3 points or 3 contracts, 5, 6, 7, 8, 9. It's still exactly the same process. It really is when it comes to that. And then if we switch it back, right? So this is 9 points, or 9 contracts. So we're trading this, and if we're going to be trading 9 contracts, let's just say we have a tighter stop loss, and let's say we're watching the market move on, say, a 1-minute chart, and we're thinking, wow, we're down 3 points. Not a big deal, right? Because we're following our process. Then if we switch it to where was it? If we switch it to the dollar amounts, and we're looking at this and we're just like, wow, watching that P&L fluctuate is a lot more dramatic when you're seeing the dollars. You're like, wow, I'm down $300. Oh, I'm $100. Every little movement and fluctuation in this market changes the way you feel and an emotional reaction, regardless of whether you think about it or not. Just do it. No, it's not really about me sometimes. This is kind of the way my brain works. And I've had lately, especially last week, the past few weeks, I've had a lot of traders ask me that, where you're saying process over profits. Well, what's your process? How can you handle a $2,000 loss? Like, how can you handle that type of loss? How can you not close your position out for profit? Like, if this is my profit, say up here, looking for those 32 points, how do I emotionally handle this market going up, and say the market's up here and I'm up $1,700? How can I just hold on to that, right? Or how am I able to just hold on to it and just let me get stopped out at minus a $2,000 loss instead of just closing it? Well, it's that mindset where I'm thinking, and I'm going to go like, oh my gosh, I'm going to close out of this. I'm going to close out of this. I'm down $500. And then that fear of losing money, or the fear of giving money back up, once I'm in profit, and the fear of, oh, well, this market could turn around and then I could lose $2,000, even though I was up $1,700, right? That is very, very emotional as a trader when it comes to making decisions, following your process, following process over profits. And so the way I trade and the way I think is purely in terms of points. I love the idea of points. You could say ticks, points. I like points because it's a little simpler and easier to calculate in my head. And for me personally, I do like using 5 contracts. So I'm going to do 5 contracts, and I'm going to walk you through exactly the way I have been trading my live account, and I have been trading on TopstepTV. So let me do this. I'm going to get it. So typically the way I think is, just lately, is I don't want to risk more than 1% of my account in any trade, usually about 0.5% per trade in my account. And 5 contracts for me has been decent. 5 contracts is $100 per point, $100 per point. So say I'm risking 10 points. I know that's $1,000. So in my head, I could do the math. It's quick, it's easy. And if I go to that and I change it to dollars, you could see, okay, 5 contracts, I'm risking about $1,000. No big deal. It's easy. I could think about it. It's quick. But then when I'm trading and I'm following my process, it's all about points, right? Where, I'm looking to make, say that this is a 1-to-1 risk reward, and then it's so much easier to follow your process. What's everybody's thoughts on this? Now, this is how I trade. This is the way I think. I don't think about the dollar amounts, but when I'm trying to demonstrate this on TopstepTV or during slow markets, it's very hard for me to explain like this type of thinking, because this is truly what it needs to be. It really does. Because once you follow a process, and let's say you get really consistent at doing this, let's say over a period of 3 months, 6 months, I get really good at trading like this. And I could follow this process so easy using 5 micros or even 1 micro. And, hey, I could make 10 points on average every single day. Right? It's easy to make 10 points, relatively speaking, right? Nothing's really easy in the markets. But let's just say that. Let's say it's relatively easy to average 10 points a day because the Nasdaq moves really, really quick, and it's pretty simple. Like, this is a 5-minute chart, and you can see all these the movements that happen on the Nasdaq on the 5-minute chart, especially during the New York session or overnight trading. So 10 points is not like an extreme and very difficult goal. It's realistic. So if I'm going to be looking to make 10 points, what I will always recommend is do that. Let's just do 10 points, a 1-to-1 risk reward. Do that with 1 contract Practice it. Practice it. Do it with one contract. It could be a micro, right? It doesn't matter whether it's a micro, whether it's a mini. Practice it. Practice it. Practice it. Follow your process. Follow your process. Change your mindset from, not thinking about dollar amounts, thinking about points. So I'm going to start to do that. I'm really going to try and demonstrate that on TopstepTV and whenever I'm on my slow markets class, because that I've got a lot of questions, and that's been kind of my answer and kind of how I've been trying to explain it, of answering the question, why do you say process over profits? What does that look like? What does that mean? How do you think about that? How can you just let this market just go? How do you hold your trade and not close it out before it gets to your take profit? How do you close your trade or hold your trade and not close it out before it hits your stop loss? And all the traders who, it's obviously with the power of hindsight, it's a lot easier to say, hey, guess what? Every time the market does not follow my process, or it gets so close to my stop loss, it's very easy when you're looking at these dollar amounts, like, oh, I'm up, $300. And when the market's moving a little bit quicker, how do you handle losing a $2,000 loss and not let that affect your very next trade? And this is the mindset that I typically go into the markets. Now, I could do easy math and say, 5 minis is $100 a point. I'm down to 25. And so there is that basic math that I typically don't think about a lot of the time. It's really the process. Points let you know how big of a move you need. Dollars don't really say. Dollars is relative. Dollars do not mean much unless we're doing risk, right? So if I come in here and I put let's see, let me do a daily loss limit. Let's just say I have a daily loss limit of $3,000, okay? Daily loss limit, $3,000. My daily loss limit is $3,000, or even, let's just say 3,000. Well, technically, I calculate that in points. So if my daily loss limit is $3,000, then before I start trading, before I start my trading day, or before I start my trading week, I'll do that. I'll do the math. Say, okay, $3,000. If I am going to be trading 5 contracts on average, or just say I want to trade 5 contracts, I know that because my daily loss limit is 3,000, and I know and I do the very basic math where it's $20 per point per contract, which is $100 per point. I have 30 points of my daily loss limit is 30 points. Okay, so simple, straightforward. Daily loss limit is 30 points based off of how I've been trading. So 30 points. I have 30 points worth of risk. And so that way I'm trading 5 contracts. And with this, I have 30 points daily that I could risk. And so that means I could take 3 trades at 10 points. I could take, maybe 2 trades at 15 points. Each trade's going to be different. Okay, so each trade's going to be different. Not every single trade's going to be exactly 10 points. Every trade will have its own unique, stop loss and take profit. So some trades, for example, might be 19 points. Maybe there's just one good trade setup, and maybe this is the trade setup. Well, my stop loss is down here. I have 30 points worth of risk. Where's my take profit at? And maybe I'm looking at something like this. Say, okay, that's valid. This is a 1-to-1 risk reward. This is a good trade setup. I understand I'm going to be risking 30 points, and that's fair. Or what you could do is instead of 5 contracts and 30 points, I could change the size. Maybe I'm only going to be doing, let's just say, 1 contract. And if I'm doing 1 contract and I have, $3,000 to work with, I have 150 points. I have 150 points worth of a daily loss limit. So I could trade, knowing that I have 150 points if I'm going to be using, 1 contract. So there's a little bit of math involved, but understanding that will help. I know it's helped me, but hopefully it helps put and wrap your head around the concept of process over profits. Image and words. 1% of my account is in dollars, not points. That's why I do the math beforehand. And that's how I base my daily loss limit typically. And then, like, for example, say this account. Let's say if this my live account, I should probably just pull up my live account. But my live account is at 370,000 now because I'm in a drawdown. I am in a drawdown over the past week and a half. So my account is at 370,000 right now, I believe. Let's see. And what I do is I take a percentage off that. And right now, my daily loss limit on my live account, I have it at $5,000. Okay. And so no matter what, the most I could lose in a day is 5,000, and that's based off my $370,000 account is about just over 1. It's 1.3%. 1.3% is if I hit my daily loss limit. Okay, let's just say that for example. So that means when I'm trading, I already know for a fact. If my daily loss limit's 5,000 and I have 50 points. Am I going to risk a full 1.3% of my account on one trade? Very rarely will I risk the full 5,000, my fully daily loss limit. I'm a lot better off risking, maybe I risk, 20 points on one trade, 15 points on the other. And I could do that math. It's very simple. It's very straightforward. And it's kind of like, I don't want to say back of the napkin math, but it's something to where I have it so simplified. I don't have to think. I don't have to think between each trade. I'm able to follow the process. Okay, so it's easier for me to follow the process, just thinking about points, not thinking about dollar amounts. I don't have to do the calculation every single trade. I don't have to go through that. I do a very, back of the napkin math before the trading day, before the trading week, and say, all right, for this upcoming week, because everything's average. Images is averaging is something that I like to do because the markets fluctuate, my P&L fluctuates, I go through drawdowns, I one day is very profitable, one day's I lose money. And so I take an average. This is just me personally to where I say, okay, about this much is what I'm going to be risking for the next month. Okay, some days I'm going to have profit, some days I'm going to have loss. I don't go through and do these calculations every day because if that was the case, I would be on the phone call with the risk management team daily and saying, I need my daily loss limit changed to, this. It's like, oh, my daily loss limit exactly now needs to be like 5,120. And then I save that. And then my daily loss limit needs to be 1,160 if I made some dollars. So I do just nice whole round numbers, simple, straightforward. $5,000 gives me, 50 points a day if I'm trading, 5 contracts, 100. I mean, what's that? If I'm trading one contract, $5,000, that's what, 250 points. 250 points with one contract in a day. And if I'm only trading one contract, there's no way I should be hitting my daily loss limit. So, did that make any sense? I'm going to continue to, I think I'm going to continue to make this a big point. So let me get out of all that. So I'm going to continue to put this under a magnifying glass. I'm going to continue to explain this in as much detail as I can going into the end of the year. Going into the end of the year, this is what I'm going to focus on. I'm going to focus on how do I look at the markets in terms of process over profits. Do you risk 1% of your total profits? Like if you started another 150K, do you consider that 150K part of the calculation? Jose, okay, it depends on your account size. Some traders I've talked to use a percentage of their max loss limit. Some traders use a percentage of their daily loss limit. I use a percentage of my total account balance. Right now, I'm solely focusing on my live account, and for example, 185,000 or 170,000. Still living in the past, pretending I don't even have a drawdown this past 2 weeks. But 370,000, I use 1% of that. I do the calculation typically at the beginning of the month. I'll round up. I round up, and then I go from there. Dakota you like having just one account? What do you think about having multiple accounts with different risk or different instruments per account? So, Segi, let me make sure I understand this question. And I know I kind of pivoted. We'll talk about crude oil and these other markets in just a moment. But this is very important, and this is something I was going to talk about. But we only have an hour. We only have 30 minutes left. So I wanted to stress this because my slow markets is the most important to me. And so I always give slow markets the special attention, comparing that to the day show where I have a lot more time and I could go a lot more in depth because it's just me. So that makes sense, but not sure my brain is wired the same. Yeah, so it's not for everybody because, maybe not everybody can think of it in terms of points, right? Where it's like, okay, I'm going to buy one and I'm going to risk 20 points and I'm going to look to make 20 points. So something like this. That's hard to think of, right? And I know this is one of the harder things that I've ever struggled with. It was, but the way this has worked for me, then I'm able to focus on the process. So when I do start trading bigger account sizes or bigger trade sizes, I don't have to think about anything else. I don't have to think about the dollar amount. I'm going to actually make this a better order. Because this market does look like it's going to sell off. I do think that we could have a bit of a sell off here. But let's just say this. Let's say I want to risk this. And this is my process. Okay, I'm risking 15 points to make 15 points. 15, I want to make this round numbers. One contract. This is a more realistic trade. Now, how much of profit is this going to be? Well, let's do 20. Because do math. So I'll make $400 on this trade. I will make $400 on this trade, but that doesn't matter. It's about the idea, right? Because if I was to do the math, 400. So no big deal. However, if I was to trade, say, 10 contracts, it's going to be the same process. It's going to be the exact same process. So regardless of whether it's one contract, 2, 3, 4, 5, 6, 7, 8, 9, 10, whatever it is, it's the exact same process. The only difference is, are we thinking about the dollar amounts and watching the dollar amounts change? Or are we looking at the same exact thing? Points. When you start to get to, bigger size, and, very few ever will get to, bigger size. Maybe I don't think anybody in the chat would be trading for someone else, right? Where you're trading for an institute, you're trading, some liquidity pool or some pool, like, right, to where you're trading, instead of say $150,000 account, you're trading say 5, 10, maybe even $50-60 million. This is the correct way to think, because when you pull up, and maybe we could even have this conversation with MP or somebody who's had more experience than I do, but I'm pretty sure they'll confirm the same thing. And you hear it, Hogue, Eddie, MP, they've all been on the trading floor, and it's the same thing. They talk about, hey, they're just trying to get the spread. What's the spread? Quarter point, depending on what market they're in. And, hey, we had a 3 point. How much did you make today? We made 5 points. Well, it doesn't really matter whether that 5 points was on 10 contracts or 100 contracts or whatever. It's really the idea, because whatever process you follow, whether I'm making 15 or 10 points on one contract, or I'm making that same amount of points on 100 contracts, it's exactly the same. And I can't stress that enough. It's the same process to make 10 points with one contract, $200, or 10 points with 10 contracts, $2,000. And traders get stuck in that mindset because they're thinking about this dollar amount. That's all they think of. They think about the payout. They think about the dollar amount. which is good, right? That's the ultimate goal, is the dollar amount, but that traps and it gets a lot of traders to overreact in a lot of situations, and it gets traders to overcomplicate it, and they self-sabotage by closing a trade out early, or mismanaging a trade, or moving their stop loss too soon, or making an emotional decision that ultimately affects their trading strategy or their trading statistics, or the P&L that they want. Where how many times have you thought to yourself, man, if I would have just left that trade on, or if only I just let it hit my take profit, or only if I would have kept my stop loss where it was, that would have been a perfect trade. I could almost guarantee every trader in this chat has probably had those thoughts where they're thinking, I should have never moved my take profit. I should have never moved my stop loss. I should have never done that. I was afraid to lose money. I was afraid to give back some of my profits, or I didn't think it would go that far. So leaving money on the table, well, it depends. If you break your process and the market would have done exactly, followed your exact process, you left money on the table. To me, I would consider that leaving money on the table. Is if I have a trade setup like this. Let's say, this is my trade setup. This is my process. Maybe for this one, I'm risking 10 to make 10. And for some reason, I have an emotional decision. I just close it out. And to me, I would say I left 3 points on the table. I left 2 points on the table. But now if the market just sells off and it keeps going, everything else past my take profit, all of this, no, that's not money on the table. That's unrealistic. Just, hey, I followed my process. My process said 9, I'm only looking for 10 points. Everything more than that is not money I left on the table. Of course, I would have loved to take advantage of that. But everything up into following my process, if I break it, then anything that is, say, in here that I break, this is the money that I leave on the table. Yeah, so for me, it's this, the way that I look at it. Now, of course, if you have a process that says, okay, I have a time stop after 5 minutes, I'm going to close this out. And if you follow your process and say, my process said after, 5 minutes from being in this trade, I close my trade out, then, this isn't money that you left on the table, right? Because it's following your process. Everything outside of your process, to me, is being broken. It's a mistake. You left money on the table. And of course, maybe this thing does turn around, right? I would even argue, I would really argue that if I close this out now and I lock in 6 points and then the market turns around and hits my stop loss. Now this is controversial, and I want to know what everybody in here's opinion is of this one. Let's say this, okay? Let's say I close this trade out now. Let's do that. I close this trade out, and now the market comes up and it hits what would have been my stop loss. Was that a good trade or a bad trade? If that was exactly what my trade was, there's my entry. This one up here is going to be my stop loss. And this one down here is my take profit. And right here is my entry. So that is not a good or a bad. Bad trade, good. Take that one. Let's say I broke my process and I just decided to close it out. And then it turns around and hits my stop loss. Bad trade, stopped out based on fear. Depends on why. If it was just, yeah, so it depends. So if I'm not following my process, I would dare say that this was a bad trade, right? If it kept going, and even if I closed out for profit and it went and it hit my take profit, I would still say it's a bad trade. So whether or not I made money or lost money, the moment I broke my process because of a dollar amount decision or an emotional decision, it's a bad trade. And I know I've had fun and good, intense debates with traders that, no, you never go broke closing profits, right? My argument to that is You broke your process, you know your statistics, and if you're breaking your process, it throws your statistics. Your statistics are no longer true. Your process is no longer true. And everything that you've done in terms of process, preparation, and following is no longer valid. And your decision to close the trade, regardless of what happens after, now changes your, overall expectancy. And if you do that over and over and over and over again, what was a profitable strategy could very well be a losing strategy just because of that. Now, that's why I will always recommend it's okay to have, processes that helps you, get out of trades. Like, for example, if there's a news event coming 5 minutes before news event, I'll close the trade out because that's a process. That's measurable. I could go back and I could look at my trades and say, why did I close this trade out? And it's like, okay, I closed this trade out because there's a news event, or I closed this trade out because, the batteries in my mouse died. I don't know. You can have any list of reason to close out of a trade. Just make sure it fits within your process so that way you can measure it, and that way you don't have to be guessing. You don't have to, say, oh, I don't know if this followed my strategy. Does this skew my statistics in any direction or the other? Anyway, so yeah, that was a little not planned, but I figured I'd talk about it because that's very, very important whenever you're placing a trade, and whether you're getting into a market, to focus about the profit over, or process over profits. Process over profits. I will always live off that. I will always be telling traders that exact same thing, whether it's 1 micro or 100 minis. It's the same thing. Explain the reason I am not allowed to hedge. What do you mean by that, Bankroll? If you're in a combine or a live account. NQ, I'm looking at 15-minute support, break-even trades. Okay, break-even trades are great to me. I was positioned for profit and had no risk. Yeah, Willie. So that's what I'm saying. If you have a process that says once you're in profit, or once something happens, then you move your stop loss to break even, that's great. That really is great. Richard, it's so funny watching all these prop firms changing rules. I enjoy it. It is kind of funny, huh? I think we're in the next 12 months. You're gonna there's gonna be tons of changes, and I'm excited for it. I'm very, very excited for these next 12 months with everything that's going on in the futures space and the prop firm world. Chat goes too quick. How do you calculate position size? What do you mean? It depends. If you scale into a trade, can you still track points? I will track the points. Yeah, this is solely based off of a single position size, right? This is a single position size. If you change your position size, say 1 contract, and then your next trade is say 3 contracts, and then the next trade is say 4 contracts, that throws everything off, right? But I mean, it depends on the way you trade. You have to understand, are you going to be trading a single contract? Are you going to be scaling in or scaling out? If you're scaling in, so I want to show it, zoomed in. So I'm going to zoom in. I'll kind of explain this one because I don't want to get too advanced, because that will continue to take time. So if I believe the market's going to go up, and then I buy 1, right? And I say my typical contract is 5, right? My typical contract is 5. And let's say my stop loss is here. So far, I don't count my points until I'm in my full position. So that I'm up, say, I want to see if this one will work out. I'll do 10 points. 10 points. So for example, I'm up 1 point. I'm up 2 points. So 2, now I'm only up 1. So I wait until I get to my full position and say, this is now what I like to count. And so yeah, that's where it makes it a little bit hard. I like to consider full position. Once I'm in a full position, that's where I count the points and say, okay, well, how many points am I going to be risking on this one? Depends. Do you recommend having a trailing stop once you're in profit? It depends on your strategy. Some traders love trailing stops. I do not love trailing stops once I'm in profit. I love trailing it. Correction. I love trailing it manually from pivot points. So I do love to trail it once I'm in profit. It just depends. Guess you're not going to see market analysis. I did a little bit here in the Nasdaq, and then I'm talking about something that's much more important than market analysis. So yeah, we could start to move on. Does this make sense? I think I clarified it. I'm going to continue this week and throughout slow markets and during the daytime, TopstepTV. I'm going to continue to stress this. I will continue to stress this. I'll continue to explain it. You're going to see a lot more of this. Now, that being said, let's move on. We only have 15 minutes left. I'll finish up a quick rapid fire, then I'll answer a few more questions. So let's take a look at this. Hourly, crude oil. Crude oil is an interesting one. We did start to break down through this. You can see today, tonight, or yesterday, throughout the week, throughout the holiday, we did sell off. Tonight is a situation where we're just coming off of a holiday, and I'm going to wait for this market to settle down a little bit. Whereas there's a lot of people, there's a lot of institutes, there's a lot of banks, there's a lot of traders who did not trade. I'm one of them. And if that's the case, there's probably during the New York session that we might see some wild moves. It's going to be an interesting thing to see. I want to see the market, start to settle down, maybe get into a better rhythm during the New York session. So I'm not too excited to trade this crude oil. When it comes to the way that we have been reacting, we've been basically looking at all this consolidation. We're right in the middle of this consolidation from the middle of November. We have a lot of consolidation here. We're right at the bottom of that. And it looks like we tried to break down below, and we found a lot of buyers stepping in right around, $67.80 to $68 a barrel. And, are we going to see this market continue to just consolidate and whipsaw? Because it looks like we did the same thing up here at the top. Right, where we rally up, we failed, and we went right back down, we failed. And so are we going to go right back up to the top? I'm not sure. This is a tough market to trade when we are making higher highs and we're making lower lows. This is a rough pattern where if you see something like this, megaphone pattern, it's ugly. It chops a lot of traders out. So I'm passing on the crude oil until maybe tomorrow when things start to settle down a little bit and get back into the trading. Nikkei, this is where I took a loss in my live account. You guys can imagine what I was looking for. I took a loss in the live account. I was a little pissed off, to be honest. Yeah, I don't know. Now it's one of those with hindsight, right? So this is what I was looking at. Take a look at this. I'm looking at this. There's a lot of resistance there. Okay. And I was long. I'll explain my trade. I'll explain my analysis. So we rallied all the way up there. We touched it. We had a little bit of a sell-off. And this looks like throughout the holiday. And so this is something I was watching. And I was looking for this market to rally and possibly have an opportunity to break out. So I was looking for this to break out. And so on the 5-minute chart, I'll show you what I'm looking at and what I did to get in long. We had this nice rally, and everyone knows I love to buy pullbacks. We had a nice pullback. We opened up right here, and I don't like getting into a position right at the open. So there's the open, and right after the open, we did continue the pullback. We got to a pullback. We got in. This is a nice pullback. This is kind of the support zone, the support and resistance zone. And as soon as I seen this 3-bar reversal, man, this thing, it hammered me. I was pretty upset. So I was looking for a long. And I was looking for this market to have some type of continuation, at least maybe come up and test these 38,400s. And if we zoom into a smaller time frame, say the 1 minute, you can basically see what happened to me, right? I ended up getting in. I didn't get the best of price. I got in at this breakout. So I got in at the breakout of this pivot right there. So I got in right there at, let me show you. That's the pivot we broke out. I got in right at, like, right there. And, you know, sure enough, just smashed me. I took the loss on that one. This is frustrating when it happens, but I mean, there's nothing you could really do. There really isn't. I mean, sometimes the market can do that. I took a loss, and now watch this rally. I don't know how I feel about that trade. Would I take it again? You know, probably. I'd probably take this trade again. I like the breakout. I like the rally. It looked like we were going to continue to break out, and it had the potential. If we look at these higher time frames, it had the potential to be an amazing trade. So my entry would have been. So if this was my stop loss, my entry would have been like, say, I think it was like 290. And taking a look at this higher time frame chart. So this is where the entry was. And I was hoping for this to be an overnight trade. So the potential was there. The risk reward was there. It would have been about a 3-to-1. A 3-to-1. My first take profit was going to be right there at around, 38,700. Or my first take profit was the test of this. So immediately I was looking for a test of these 440s, 450s. That would have been a first take profit. And if we did break out, we know how the Nikkei could run. And I was looking for the market to come up here and test it as a stretch target, maybe an overnight. And so that's what I was looking at. It didn't. We slammed. We came down in here. We even ran some stops. Everyone who was long that had their stops based off this pivot, looks like they just got ran as well. And there's some great buying opportunities if somebody caught it. And I don't know if anybody would have been able to catch this. But now we're starting to move back up. Is Nikkei more leveraged than the Nasdaq? I'm not sure what you mean by that, but the Nikkei is $25 per tick, and I do not recommend it for a newer trader. But I do trade it. I think let's move on to the next one. Gold. I want to finish continuing talk. We only have 10 minutes left. Gold. Let's take a look at the hourly chart. Pretty bearish, if you ask me. I'm actually looking for gold to continue down. I'm looking for gold to sell off. And I mean, we're starting to sell off now, but I'm looking for gold to come back down and test 2,600. Tomorrow morning, I wouldn't be surprised if we're back down at this pivot low. I would not be surprised if we're around 2,600, maybe the 2580 to 2590 level. This is an hourly chart. Gold is not looking too good. And we had that nice sell-off last week, and more and more this is looking like just a bearish flagging pattern. And tonight we are starting to at least show some break. Has this confirmed the break? Depends on what you consider as a confirmed break. Maybe we're going to look at breaking this pivot low first, but I see gold continuing, to keep going down and to the right. Now, Bitcoin. It looks like we tested 100,000 again. We did test 100,000. Yep, 100,000, 100,000. This is great. That's really good. Can we hold above 100,000 though? Is going to be the next question. You know what? At this point, I think so. I mean, I was looking for this to be the sell-off, and I was kind of, thinking that there's a possibility for this correction to maybe come down to 80,000. I was looking for even a bigger correction. As you guys know, if we go back to a daily chart, I'll show you what I was looking for. And, just an average pullback, which is kind of funny to say, an average pullback. If we take a look at these moves, I was basing it off of a percentage, right? About 17% if we measure some of these pullbacks, depending on how you measure them, these are some decent sell-offs. These are pullbacks, 17%. Some of these were 20% plus. And so I was kind of looking for that, okay, well, we were down about 9%. And I was looking for us to get to maybe something close. Of course, I'm not going to expect a 20, a massive sell-off. I was looking for just a pullback. So that way, maybe we could see that continuation and a nice bounce. But it looks like so far, that's all we're going to be getting. Where maybe it's something to where a measured move would have been a little bit better. Where if we're just measuring these moves, right? Where it's like, well, what's a measured move? How are we doing these measured moves? I don't know. I don't trade Bitcoin enough to justify, well, a measured move. It used to be 17%, but since we're now at 100,000, the measured move is only 8%, maybe 9%. It's a little bit difficult. I did buy my very first cryptocurrency, my very first cryptocurrency I own. I bought it Thanksgiving morning because everyone's talking about it. Everybody was talking about it. XRP. Everyone was talking about it throughout the weekend, so I ended up buying it, and it's straight up like that. It was weird. I don't know. I mean, I'm trying to pull it up over here on my phone. I'm not a crypto trader. I ended up paying like $1.60 per. Do you say coin? Is that $1.60 per coin, or per share? Yeah, I think it's per coin. So I paid $1.60 for it, and yeah, we're sitting at $2.30. I've almost doubled my investment in like 4 days. Token, okay. I mean, I'm doubling an investment in like 4 days is just. I'm considering selling it, but I do want to sell it. This is weird. This is just weird. Really, a token? Sell half. Next stop. Why Bitcoin? I mean, Bitcoin's kind of the golden standard. I mean, no pun intended. Like, everyone's talking about Bitcoin. We're at 100,000, but I look at potential in terms of, yeah, Bitcoin still probably has a ton of potential, but I mean, could you imagine buying Bitcoin at what, $2? I don't know. I'm new to this crypto thing, and that was just a fun thing I did. Insane, this XRP. Yeah, XRP. It's insane. I don't have it. I mean, I just have it on my phone, but I don't know if you guys will see it. Over the past 24 hours, it's up 25%. Me buying XRP's the top. Well, I bought it at $1.60, so me saying it is the top. I don't know. Just like spot rates and contracts, it's nothing physical. I didn't make a ton of money. I didn't put a lot of money. I put 5,000 into it, and it's sitting at, where is that? It's sitting at almost just double. It's not a lot. Did I just buy one? No. I mean $5,000 at $1.60. What was crazy is Bitcoin charges 1%. And so like the commissions were, I was like down 1%. I'm like, ugh, this does not seem right. So I put in like, I was on like 3,000 XRP coins, or what have you guys called them? Yeah. Yeah, it's called Ripple, I think. Tokens. Yes, tokens. That's what I mean. That's what I mean, everybody. So we have 5 minutes left. It's going to be a great week. New start of the week. It's a full week. There's a lot of craziness. We got some news. You guys seen the team talking about it earlier. But, yeah, I'm excited. This is going to be a great week. I am in a drawdown in my live account. I mean, I go through drawdowns all the time. I probably go through drawdowns more than anybody else you see on YouTube, which is just weird. Well, why I don't see a lot more people talking about their losses, which is more common than what is shown on social media. An average drawdown for me, I mean, $20,000 to $40,000 worth of drawdown is about where I'm at. Right now I'm at 20,000. So my account high is 385,000. My current balance is 370,000. So I guess it's only a $15,000 drawdown. But yeah, that is part of trading, right? Markets do not go straight up. Equity curves do not go straight up. It's absolutely insane to me the amount that you see on social media that do not talk about their drawdown and they do not talk about their losses. Maybe it's a scary thing. Maybe they're just scared to post their losses because of everyone that gives them negative feedback on that. So I don't know. We'll see. I don't mind. I'll continue to be posting about my losses. It's part of it. It really is part of that. If there is no such thing as a loss or a drawdown, show me where it's at. Even Bitcoin. Everyone's talking about how bullish Bitcoin is, right? If someone just had Bitcoin as their whole portfolio, they would have made so much money, but yet they've suffered, 20% drawdowns, 24% drawdowns. So drawdown is part of the game, even day trading, no matter what. So I'm looking forward for this week. See if we could get some of that drawdown back out. That's how you climb out of a hole, right? Number one, you got to stop digging. Number two, one step at a time. So tomorrow morning is going to be great. I believe MP is back, and we could sit there and we could just have fun talking about the Chicago Bears, because the Chicago Bears have been one heck of an entertainment on Topstep TV. And I know that everyone's based out of Chicago. MP, Eddie, everybody, and they're Chicago Bears fan. I'm looking forward to tomorrow. I've already started talking smack behind the scenes, so that's what I look forward to on Mondays anymore, is talking smack to the Chicago Bears fans. Other than that, I'll see everybody. See everybody tomorrow, maybe tomorrow night. Take care.